DoorDash Inc., the dominant on-demand delivery marketplace in the United States, holding over 65% of food delivery market share and expanding into grocery, alcohol, and retail across 25 countries.
Dash went from a Stanford dorm room startup to a $13.7 billion revenue business in just over a decade. The path from food delivery to a broader local commerce platform is the thesis investors are watching.
The story begins in 2013. Tony Xu and 3 Stanford co-founders launched DoorDash after discovering delivery was restaurants' biggest unmet need. First orders came from a single Palo Alto sushi restaurant.
By 2018, DoorDash had raised $500 million and expanded to over 1,000 U.S. cities, surpassing Grubhub in several markets. The COVID pandemic then accelerated the category by years in just months.
DoorDash IPO'd on NYSE in December 2020 at $102 per share, capturing the COVID demand wave. In 2022, it acquired Finnish delivery platform Wolt for $8.1 billion, launching international expansion.
The United States generates 78% of revenue driven by marketplace commissions, DashPass subscription fees, and advertising revenue from merchant promotion placements.
International revenue from Wolt accounts for 22% of total revenue. Finland, Denmark, Germany, and Japan are the anchor markets, with Wolt approaching contribution profitability.
Gross margins reached 51% in fiscal 2025, steady improvement reflecting better merchant economics, DashPass contribution margin, and advertising revenue mix. Operating margin has expanded to 5%.
Revenue grew 29% year over year to $13.7 billion in fiscal 2025. Net income reached $935 million, the first full year of consistent GAAP profitability.
Uber Eats is the global competitor, present in over 70 countries with the Uber mobility app as a cross-sell driver. DoorDash holds a commanding U.S. lead in order volume and restaurant selection.
Instacart owns grocery delivery in North America, a different category that DoorDash is entering. The overlap intensifies as DoorDash expands DashMart convenience and grocery delivery partnerships.
DoorDash's moat is network density. More Dashers per zone means shorter times and lower costs per order, which compounds into a selection advantage that makes DoorDash the default choice.
DoorDash covers 94% of the U.S. population and operates in 25-plus countries through the Wolt brand. DashPass has over 15 million active subscribers who order at above-average frequency.
North America is the profit engine. Wolt is the international growth vehicle. Europe and Japan are the anchor markets, with DoorDash evaluating direct entry into additional Asia-Pacific geographies.
Tony Xu co-founded DoorDash in 2013 and has served as CEO since inception, building the company from a Stanford startup to the dominant U.S. delivery marketplace while managing the Wolt acquisition integration.
Xu's background in operations and product, shaped by early work at Square and McKinsey, drives DoorDash's obsession with logistics efficiency, which is the core competency underlying its market share lead.
DoorDash, the dominant U.S. food delivery marketplace, $13.7 billion in annual revenue, 65% domestic share, and Wolt as the international growth engine across 25 countries.
Q1 2026 delivered an EPS beat, but a slight revenue miss versus consensus. Order volume trajectory, Wolt profitability, and the grocery expansion thesis are the 3 questions the full earnings episode answers.
DoorDash reported gross order value of $31.6 billion in Q1 2026, up 37% year over year. GAAP EPS came in at 42 cents, beating the 36-cent estimate. Revenue of $4.04 billion missed the $4.14 billion estimate. The stock jumped 12% anyway, because the volume and profitability story overwhelmed the revenue headline. This is Charged Alpha. I'm Hudson.
And I'm Lana. DoorDash is the dominant U.S. food delivery platform with approximately 67% domestic market share. Founded in 2013 in San Francisco, the company connects consumers, restaurants, and Dashers on its logistics marketplace. Beyond restaurants, DoorDash has expanded into grocery, alcohol, and convenience delivery. International operations run under the Wolt brand, acquired in 2022, covering Europe and the Middle East. Market cap is approximately $72 billion.
Tony Xu co-founded DoorDash and has served as CEO since inception. He led the December 2020 IPO and built the company into the clear U.S. food delivery leader, launching DashPass subscriptions, expanding into grocery and convenience verticals, and executing the $8.1 billion Wolt acquisition in 2022. His strategic focus on gross order value as the primary value creation metric defines the company's operating philosophy.
Gross order value, the total dollar value of all orders placed on the platform, hit $31.6 billion in Q1, growing 37% year over year. GOV is the defining metric for DoorDash because it determines the full revenue base available to monetize through marketplace fees, subscriptions, and advertising. At this scale, even small improvements in take rate translate to hundreds of millions in incremental annual revenue.
Platform revenue of $4.04 billion grew 33% year over year from $3.03 billion in Q1 2025. The miss against the $4.14 billion consensus came from marketplace revenue mix and Wolt recognition timing, not a structural demand change. The underlying volume trajectory, anchored by GOV at $31 billion, remains strong.
GAAP EPS of 42 cents beat the 36-cent estimate by 16.7%. Net income was $183 million on revenue of $4.04 billion, a 4.5% net margin. DoorDash posted losses in every quarter from IPO through 2023, making consecutive GAAP profitable quarters in 2026 a meaningful inflection in U.S. marketplace unit economics.
Operating income was $151 million, with EBITDA of $461 million. Gross margin held at 50.6% as Wolt geography mix offset U.S. efficiency gains. Free cash flow reached $420 million for the quarter, annualizing above $1.6 billion, a dramatic turnaround for a business that burned substantial cash just 2 years ago.
DashPass subscriptions continue scaling as the primary GOV growth driver. Members order significantly more frequently than non-members and exhibit measurably lower churn, a flywheel that improves marketplace density and reduces per-delivery costs in established metropolitan areas. Management called out DashPass penetration as the leading accelerant of GOV growth in mature U.S. markets.
Q2 2026 guidance was GOV of $33.5 to $34.5 billion, approximately 32 to 36% year-over-year growth. DoorDash did not provide a revenue number, consistent with their practice of guiding on volume metrics. The Q2 GOV range implies sequential acceleration and gives management the flexibility to optimize revenue and take rate mix without anchoring to a hard revenue commitment.
Wall Street reacted strongly despite the revenue miss. The 12% gain reflected analysts reframing around GOV outperformance and EPS beat. The bull consensus is that DoorDash is entering a multi-year profitability expansion phase, where incremental GOV growth creates disproportionate profit improvement through operating leverage in a mature, high-density marketplace. That reframe happened quickly and decisively.
Bulls pointed to GOV acceleration as the primary signal. 37% year-over-year growth at $31 billion in scale is exceptional by any comparable measure. DoorDash gaining GOV share while simultaneously expanding GAAP profitability is the bull thesis executing cleanly, and at a scale where Uber Eats, the only direct comparable, is growing delivery bookings considerably slower on a percentage basis.
Bears centered on the revenue miss as a take rate pressure signal. If GOV grew 37%, but revenue grew only 33%, implied take rate declined sequentially. A structurally declining take rate compresses revenue and margin expansion relative to volume growth. Bears argued the market was overpaying for GOV volume without adequately pricing take rate sensitivity at current multiples.
Wolt complicates the revenue misanalysis. International GOV is accelerating, but at a different revenue recognition structure and an earlier profitability stage than the U.S. marketplace. Wolt's contribution to total GOV dilutes reported take rates versus a pure U.S. comparison. Analysts broadly view this as a transitory mix effect that normalizes as Wolt matures toward U.S. equivalent unit economics.
The advertising revenue line attracted notable analyst attention post-earnings. DoorDash ads, restaurant-sponsored placements, and promotional visibility carries very high incremental margins. At $31 billion in annual V, even 1% ad revenue penetration exceeds $300 million in high-margin incremental revenue. Analysts tracking the ads build see it as the highest quality margin driver in the model over the next 2 to 3 years.
The bull case starts with U.S. consolidation. At 67% domestic share, DoorDash has won the U.S. food delivery market. With competitors at significant distance, incremental U.S. gov increasingly flows to profit rather than competitive investment, the same dynamic that drove Uber's rideshare margins once U.S. dominance was established.
International expansion via Wolt adds a second growth vector early in its life cycle. Wolt operates across 25 countries in Europe and the Middle East, large markets where food delivery penetration remains well below U.S. levels. The Wolt international story is in the early innings of a long expansion cycle.
New verticals, grocery, alcohol, convenience, and retail, expand the total addressable market beyond restaurants. Each category added to the platform improves Dasher utilization and raises average order values, reinforcing the density flywheel. More order types mean more Dashers available faster, improving consumer experience and driving frequency gains across all categories.
The revenue miss is the bear case's entry point. If GOV grows 37%, but revenue only grew 33%, take rate compression may be structural rather than mix-driven. Uber Eats continues investing aggressively in the U.S., limiting DoorDash's pricing power and keeping rates under pressure in contested metropolitan markets.
International profitability is the medium-term concern. Wolt competes in European markets where Delivery Hero, Just Eat, and regional incumbents have deep roots. If Wolt fails to reach U.S. equivalent unit economics, it drags group-level margins rather than contributing the incremental profit engine the bull case models.
Regulatory and labor risk is ongoing. Gig economy labor classification laws in California and the EU could require Dasher reclassification as employees, adding benefits, payroll taxes, and scheduling constraints that fundamentally change last-mile delivery cost structure. Even at DoorDash's scale, a forced labor cost increase meaningfully impairs the profitability trajectory.
The valuation leaves little room for error. At approximately 5 times trailing revenue, the multiple is appropriate only if gov growth and margin expansion execute flawlessly for multiple years. Gov deceleration, take rate compression, or Wolt execution stumbles could compress the multiple sharply, as the 2022 derating from IPO peak demonstrated.
Uber is DoorDash's primary competitive reference, both as a direct food delivery competitor and a logistics platform analogy. Uber's rideshare profitability trajectory, which accelerated rapidly once U.S. market leadership was secured, is the closest model for what DoorDash's domestic food delivery margins could look like in 3 to 5 years.
Instacart operates the grocery segment. DoorDash is entering aggressively. Instacart's post-IPO valuation collapse from $39 billion to roughly $7 billion reflects the difficulty of achieving profitability in grocery delivery. DoorDash enters with a Dasher network distribution advantage, but Instacart has deeper retailer relationships and grocery logistics expertise.
Airbnb is an instructive profitability analog. Airbnb built a dominant marketplace, then pivoted from growth spending to margin expansion, producing 25 to 30% net margins at scale. DoorDash's GAAP profitability inflection in 2026 suggests a similar transition. Marketplace leadership secured, growth investment tapering, incremental gov flowing to the bottom line.
On multiples, DoorDash at approximately 5 times trailing revenue carries a premium to Uber at roughly 4 times. The premium reflects higher domestic share and faster near-term gov growth. As both mature, the gap should narrow, but DoorDash's domestic dominance justifies a sustained premium if U.S. marketplace margins expand faster than Uber Eats.
DoorDash options heading into Q1 showed moderate implied volatility. Call-side open interest was elevated relative to puts, reflecting bullish positioning from investors expecting gov outperformance. The 12% post-earnings gain exceeded the implied move, catching short sellers and put buyers offside. Post-earnings call volumes surged as momentum traders added to long positions.
The 12% gap up squeezed the options market significantly. Short-dated calls that were slightly out of the money pre-earnings moved deep in the money in a single session. Market makers hedging short call positions bought shares, accelerating the move beyond what the fundamental beat alone would have generated. The clean gap above key technical levels strengthened the constructive near-term chart structure.
Insider activity reflects founder alignment rather than near-term directional signals. Tony Hsu retains a substantial equity stake and has not engaged in systematic selling at current levels, a notable contrast with high-profile tech founder liquidity events at other companies. The absence of aggressive pre-earnings selling ahead of a known catalyst is consistent with management confidence in Q1 execution and the forward gov guide.
The combined read is constructive. Options flow positioned correctly for the gov beat. Insider selling restraint indicates no material concern about undisclosed headwinds. The 12% move established a new technical base. Analysts tracking near-term support are focused on the 160 to 165 range as the key floor heading into Q2 results.
DoorDash's Q1 confirms GovV and profitability are the metrics that matter, not the revenue headline. 37% GOV growth, a meaningful EPS beat, and $420 million in free cash flow tell the real story.
Bottom line, DoorDash is executing a textbook marketplace maturity playbook. U.S. dominance secured, international expanding, profitability inflecting. Bull case is operating leverage at GovV scale. Bear case is take rate compression and Wolt execution. Watch Q2 Gov delivery against the 33.5 to 34.5 billion guide.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making any investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this episode was useful. New episodes drop every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.